This is Rebecca with the Kat and Rebecca Show, Keep It Real Estate. And today we have Brian Kavanagh from the Franklin Loan Center, and we're going to talk about loans. So when you first start out, the first thing is, how do I qualify and what do I need to do? So when somebody calls me and wants to buy a house and I say, you need to talk to Brian, what's the first thing you ask for?
Well, the first thing I talk to the clients about are, I let them know what we as lenders look for. Okay, we look for three different things. Okay, we look at their credit history, how long they've had it, and the course of the last few years. Okay, the second thing is we look at income. How long they've had their income, how long they've had their job. What kind of job is it? How do they get paid? Are they self-employed or do they work for a big company? The third thing is we look at savings, their ability to save, where the money's coming from for a down payment, and if there's going to be anything left. Those are the three things that we typically need for loans.
Okay, and I always have someone who's short on one of them or missing or can't make it happen. Does that mean that they won't be able to qualify at all?
No, it doesn't. But every time you veer away from one of those items, it could take away from the terms and get less competitive terms. And I'm going to tell you that every borrower is completely different. Okay, so what works for one borrower doesn't always work for everyone else.
Yeah, I keep repeating, there are no real cookie cutter deals or clients, and it is unique, so don't stop, get the information, and that's why we're here. So now going back to those three items, once you have those three things or you've worked out that you can make it happen, what do you do next?
Well, we go ahead and I request a bunch of information from the potential borrower. Okay, all the way down to paycheck stubs, W-2s or tax returns, IDs and bank statements. Those are the biggest things. They send them to me, they give me their basic information for an application. Okay, depending on what they give me, whether it's verbal or actual documentation, depends on what I can do for them, whether it's a pre-qualify or a pre-approval. If it's just a verbal over the phone or in person, and I cannot validate or verify any of the income, credit, savings, then I can issue a pre-qualification letter, okay? Based on our conversation, I can qualify you for this amount, but I have not verified or validated anything. If they give me tax returns, pay stubs, bank statements, and stuff that I can validate and verify, I can put them into the system and I can actually get an AUS, an automated underwriting approval. I can give them a pre-approval. Okay, we have validated stuff. If sometimes, might be a little questionable on validating some of the information, we can actually send it over to an underwriter and have an underwriter give it with her license, stamp approval, so that you're good to go. Underwriters don't just underwrite the individual or the couple, they also underwrite the property and the type of loan as well.
Okay, and that does also sometimes qualify how strong you are as a buyer. So if I'm an agent, a pre-qualification is good, so I kind of know what to shop for you. But a pre-approval is really the way you want to go, because if a seller's looking, they want to see that you've already been approved. And that underwriter approval is the next strongest level, correct?
That is correct. Underwriter approval, those are a little bit more, I'm not saying they're difficult to get, they take a little bit more time. Whereas a pre-qualification or a pre-approval, we can do that within 24 hours or less, depending on the borrower giving us the items. Underwriting approval, we actually have to submit a file and send it off to our underwriter and wait for their response to come back, which could be a couple of days.
Okay, so that the pre-qual could take a few hours, because that's a conversation.
Pre-qual and pre-approval can take a few hours.
Okay, now on the pre-approval, you have documented or you've reviewed, so normally does that then also just take those few hours, or
It does.
what's required?
It does. It only takes a few hours up to 24 hours, depending on when we receive them. Obviously, if you give it to me at 5 o'clock in the afternoon, might not get it done until the next morning.
Okay, so again, that pre-approval is based on how quickly you get the information, but
Correct.
once you have the information, it'll take 24 hours.
Correct.
Okay, and then underwriting, it's going to underwriting, so now we're talking a few of days now, and they can also probably ask for more information?
That is correct.
Okay.
Anything that could be questionable. Now, when underwriters look at stuff, and actually when we look at things, we go in depth into their credit. Based on their credit, and if they've ever bought a house before, and whatever their circumstances are with income, and how we have to qualify them with income, and debt to income ratios, which is the amount of debt you hold based off of the total income that you have a month, based on your proposed monthly payment. All of these go into account. FICO scores, high or low, could affect loan programs. They could affect loan rates, and type of homes can also affect that as well, from a single family residence to a manufactured home to a condo. All of those can affect the different type of loan that you do and the different interest rates that you do. We have to take all of that into account when we issue a pre-approval or get underwriting approval.
So stay tuned, because we're going to do a few more shows on how a house qualifies, what not to do, what type of loan programs there are, and rates. So till the next time.
Keep it real.
Keep it real estate.